Here in this video, we are going to be going over all of your major events, economically speaking, any and all economic data, your biggest earnings for this week, the option activity for Tesla, and where I think Tesla stock will go, and how I think this week will be for Tesla. Now, before we get into that, hold your freaking horses, because what Elon Musk just said, wow. We have to get into that first things first. So Yashu Sharma here on X basically says, why does Elon need a new compensation package when he already has 411 million shares and his $100 billion in Tesla stock would turn into 1 trillion if Tesla passes Saudi Aramco and Apple? Elon responded about 25 minutes ago and says this: I am uncomfortable growing Tesla to be a leader in AI and robotics without having 25% voting control, enough to be influential, but not so much that I can't be overturned. So Elon is basically saying here, he does not want to start something great with Tesla in AI and robotics and revolutionize AI even more than he already has, and then get so far and be stopped by people that maybe don't want to do this or don't want to do that. Because how it works in corporate America, if you have over 50% of the voting power, you make all of the decisions. So Elon, currently with 13% of Tesla stock, he does own up to 20% if he fully vested all of his options. Well, you still can't make a majority impact in the voting power. Other entities like a Vanguard or other firms that own a large amount of Tesla as well could easily block what Elon wants to do. It doesn't make sense to go all in Tesla, AI, robotics, to be blocked out when you want to do something or try something else. So Elon, yeah, he wants 25% of the voting power. That means he wants 25% of Tesla's stock. So basically, if Elon had 25% of the voting power, you're not going to need everyone to essentially be on board with you. You're going to need 25.1% of other shareholders to agree with you, and Elon would be able to do what he wants to do more freely. And I do want to be very clear. Elon owns 13% of Tesla stock currently, but he also has the right to acquire almost 300 million more shares, which would grow his interest to 20% in Tesla stock today. So him saying he wants 25% would be just 5% more of Tesla stock, which sounds like a lot less if you really think of it in the aspect of he only owns 13% today. Going from 13% to 25%, that's almost a 100% boost, but really it's a lot smaller than that. Elon goes on to say, unless that is the case, he gets 25% of the voting control. He would rather build products outside of Tesla. You don't seem to understand that Tesla is not one startup, but a dozen. Simply look at the delta between what Tesla does and GM. Again, Tesla has energy products, solar products, FSD, AI, robotics, so many different things that other companies don't have. And then Elon ultimately drops a bombshell here, a diss to pretty much everyone that has disagreed with the fact Elon deserves another comp package, which I wholeheartedly believe that, and I think that is very good news for Tesla stock investors when that happens. Elon says, as for stock ownership itself being enough motivation, Fidelity and other own similar stakes to me. Why don't they show up for work? Isn't that a good point? Fidelity, Vanguard, where are you? We need some people on the line. Ladies and gentlemen, Elon Musk has officially just put the board of directors at Tesla in a chokehold. He is forcing them to give him another incentive package, rightfully so. Now, how is Elon forcing the board to do this? Well, let me tell you, it's pretty simple. If Elon were to walk away today, he would take the best of the best talent with him. Yeah, that would be very bad news for Tesla. Very, very bad news. Not just because Elon's leaving, but because the talent would leave with him. That's the key here. So the board would never in a kabillion years just let Elon walk away without trying everything they possibly could. Elon is about to get a new compensation package. There's going to be tranches to this. Performance-based tranches with Tesla's market cap and likely operational tranches as well. Now, why is a very large incentive package good news for Tesla stock investors? Well, Elon has smashed both of the compensation packages he has received in the past, and odds are that'll happen again. Now, if there is some beefy incentives, like, again, what Elon just said recently, Tesla can achieve a larger market cap than Saudi Arabia's Aramco, which is like Saudi Arabia, the country, their oil company, which is a little bit over $2 trillion. And then Apple, which is about $3 trillion. Elon thinks Tesla can achieve both of those market caps put together. So Tesla at $5 trillion. If Elon has compensation at $5 trillion, there's good chances that Tesla will reach $5 trillion. It puts a goal in mind. And when you've already put goals in mind and set goals forth and you've achieved those goals in the past, it's a lot more likely that you'll achieve them again. It appears that Gary Black also is in agreement that Elon should get an incentive package to allow him to have 25% of the voting control. Gary Black reposted and said that he agrees with this post by Jason DeWalt over here on X. He says, I support another huge compensation package for Elon. Elon has earned all of his existing shares. Let's give him a path to earn more than 25% voting control and take Tesla to the next level. He's working harder than any of us retail investors and institutional investors sitting on our asses waiting for stuff to just magically happen. The world's best capital allocator would be more efficiently incentivized with a new incentive package commensurate with Tesla's world transforming mission and multi-trillion-dollar ambitions. It will also put in stone the board of directors believe Tesla can get to here. It's one thing to have Elon say this or, someone else say this, but when Tesla, the company itself, says if we hit $5 trillion, you'll get rewarded this, what do you think that means for shareholders? That means some fat returns. So wow, this was, just did not expect Elon to put the board in a chokehold like he just did. Let me know what you think about the situation down below in the comment section. Let's now get into all of your economic data coming out this week, as well as Tesla option activity and earnings, and what I think will transpire with Tesla stock this upcoming week. Now, I will say right off the bat, it's kind of unfortunate that Tesla has fallen so much recently, because Tesla's fallen. The SPY has hit a new all-time high on Friday, and you're set up in a position where odds are markets are going to come down from here. Markets are either going to trade sideways at best or come down. Could be substantially. That does not exactly put Tesla stock in the best position since you're already in no man's land. And we'll talk about where I think Tesla's going throughout this video, but I'll say that right now, the risk reward, it's definitely leaned towards risk right now for Tesla and for our broader markets. First up, you will have some earnings coming out this week. These are a lot of your regional banks, some of your bigger banks like Goldman Sachs and Morgan Stanley and PNC that report tomorrow in pre-market. Interactive Brokers Tuesday and after hours. Charles Schwab Wednesday pre-market. I really don't think these banks are going to be that important. We already heard JP Morgan, some of the other large banks. Discover's going to be one that I think will be very important for the markets, though, because that's a credit card company, as you guys know. And Discover has about 5% default rates right now. So about 5% of all Discover's credit card loans are already in default. So if balances on credit cards went higher over this holiday shopping season, which I imagine they did, that's one thing. But if default rates picked up as well, that's another thing. That's going to be a huge problem for our markets to say, hey, how are we going to avoid a recession if people are defaulting even more on credit cards? That just doesn't look great. So Discover is actually one that I think could have a broader impact on our markets that typically does not. Now, TSMC will also be important Thursday pre-market, and then you have other riskier regional banks like Ally. Ally has one of the highest default rates out there as well. And then you have Fifth Third Bank, Huntington, Comerica, and State Street, more regional banks really every single day of this week. Overall, in the grand scope of things, I don't think earnings are going to be the biggest thing of this week, unless you do get some crazy bad news from Discover or really good news or TSMC does really good. I don't think it's going to be as important as some of this economic data. So Tuesday, tomorrow, 8:30 in the morning, New York Empire State Manufacturing Index. Coming out for January, you're expecting -5. So we've been in a manufacturing recession for a long time. You want to see this recover, start to get better. That would be fantastic news to see manufacturing start to pick up again as maybe leisure, hospitality, some of the sectors that have done well over the past 2 years start to cool down, as it looks like is happening right now. We just had last week, or maybe the week before that, I can't remember. Everything starts to get jumbled after a while. But you had services employment that plummeted. So yeah, to see manufacturing maybe doing a little bit better probably would be some good news. Now, Fed Waller will speak at 11 o'clock in the morning Tuesday as well. And then you get a lot of data out of China, GDP growth rate year over year, quarter over quarter, industrial production year over year, fixed asset investment. For the first time ever last month, it was the first month that you have seen outflows to Chinese investments. That's something the Chinese government is not going to like particularly at all. If that does look like it's continuing, expect to see the government stepping in and buying more stock over there. The Chinese government recently started to buy stock, and that could be just the start of more purchases. So Chinese stocks may get a boost from that coming tomorrow, which would technically be on Wednesday when they would react to it. Now, Wednesday, you are going to get your most important data of this week. That is retail sales month over month for December. You're expecting 0.4%. The higher, the better. This is not 2022 where bad economic data is good for the markets. You want to see the economy holding up. You want to see the economy doing as good as possible. 5% GDP would be fantastic. I would take 5% GDP for 2024 and one rate cut, rather than 7 rate cuts and borderline recession. Yeah, you want to see retail sales coming good. Now, why is retail sales so important, and why am I bringing up a recession in regards to retail sales? Well, about 70 to 72% of the economy is retail sales, is people buying things. So if retail sales were light in December, in the month in which people buy the most products, that's not going to be good. Okay, and that will affect the GDP estimates for Q4 as well. So definitely want to watch that. You're going to get a lot of secondary data in regards to retail sales. You always do. It's not going to move the markets unless it's all kind of pointing to one narrative, right? If we get retail sales and 10 other data points in regards to retail sales, you want to see the direction all of the data is cumulatively pointing in, right? Does all of the data point towards a weakening consumer, a weakening economy, or does all of the data point to everything's okay, kind of going, in the right direction, okay? Just one off data point here out of all of them, it's not going to move the markets, but collectively, the direction of the data will move the markets. Hopefully that makes some sense to you guys. It should. I think that was pretty clear to understand. Now, Wednesday, you're also going to get Fed Bar that speaks at 9 o'clock, Fed Bowman that speaks at 9 o'clock, and at 9:15, Fed Woods that speaks as well. A lot of industrial production, manufacturing production year over year, month over month, capacity utilization, business inventories. Again, you want to see what direction it looks like the economy is going in. Direction is going to be important here, because you could have a one-off bad data report, one-off really good. Markets are not going to react to that. It's all about the direction of where the economy is going. Now, lots of Fed speakers. Like I said, that's going to be very important, because right now you're pricing in 7 rate cuts for 2024. You're almost pricing in 8 rate cuts. 7 rate cuts would be a cut, I believe, at every Fed meeting following March. So that'd be 1, 2, 3, 4, 5, 6, 7. Yeah, 7 rate cuts is pricing in a rate cut in March and then a rate cut at every single Fed meeting after that. That probably coincides with some weakness in the economy. And if Fed speakers push back on that, if they say, yeah, we're still only expecting 2 or 3 rate cuts, the markets might not like that, okay? Now, Wednesday as well, you're going to get the Fed Beige Book. So, for an example, the Minneapolis Fed, they cover Minneapolis, they cover North, South Dakota, they cover the upper peninsula of my home state of Michigan. They cover their area, and they all come together every couple of weeks and put out a report on what's going on in their districts, right? Labor, inflation, all of that. And you get the report via the Beige Book at 2 p.m. Wednesday. It doesn't tend to move things, but I personally like to read it. And it can give you a little bit of insight on maybe how the economy is doing overall. Fed Williams will speak at 3 p.m. Again, lots of Fed speakers this week. You want to watch to see what they are saying. Building permits, highlighted in red here, expected to be a big catalyst, will come out at 8:30 in the morning on Thursday. You're expecting building permits to go up by about 2,000 or so. I don't think it's going to move the markets all too much, but more building permits, definitely the better. And then initial jobless claims for the week of January 13th, expected to be about 207,000. Remember this, if we do go into recession, if there is weakness in the labor market, it will show up first in weekly initial jobless claims before anything else. So I'm waiting for a spike here. We have not gotten one. So far, things have been good. Philadelphia Fed Manufacturing Index as well will be coming out. All of your manufacturing indexes that we're going to get this week are expected to be negative. Same is true with Philadelphia. You're also going to get Philly Fed business conditions, Philly Fed capex, Philly Fed employment, Philly Fed new orders, and Philly Fed prices paid. And then ECB President Lagarde will speak at 10:15 in the morning on Thursday. That is like the Jerome Powell of Europe. So if they say anything that has, implications to policy over there in Europe, it can have an effect on our markets as well. Now, Thursday, you're also going to be getting Fed Bostic that will speak at 11:30 in the morning. At 12:05, you'll get Fed Bostic again. And then the inflation rate out of Japan. A lot of people are expecting Japan could raise rates for the first time in 16 years in 2024. And Japan is the single largest owner of U.S. treasuries. Everyone thinks China owns the U.S. No, if you want to be specific, Japan owns the U.S. or over $1 trillion worth of our bonds, our debt. So if they start to raise rates, that could have implications of maybe Japanese investors pulling their money from the U.S. to buy some of their bonds as well. And then on Friday, you're going to have Michigan consumer sentiment for January, expecting that to actually go up a little bit. The only thing that really matters here is going to be your 1- and 5-year inflation expectations. Recently, they've actually spiked quite a bit. 5-year inflation expectations expected at 2.9%, 1 year ahead expected at 3.1%. Any spike, it's going to be bad news. Fed Daily will speak at 4:15. Fed Bar at 1 p.m. He mostly just goes over banking stuff. He's the guy that is supposed to oversee all of the banks, specifically banking crisis. Well, Fed Bar was blamed for that. So don't expect that one to be really a market mover at all. But collectively, the Fed speakers this week will move the markets and will likely move the odds of rate cuts. Probably in a bad direction. Probably going to expect less rate cuts by the end of this week. That does give me a little bit of a negative kind of sense of how this week is going to be. Now, as I reported in a couple of the videos previously, maybe a couple videos ago, the 50-cent VIX trader is back. They got their name by being in the right place at the right time, going long or going short on the VIX, going in with a lot of money. This trade specifically was $17 million, and they're called the 50-cent VIX, not because the wrapper, but because they buy contracts around 50 cents. This time it was 63 cents and 67 cents. They bought 250,000 call contracts on the VIX with a strike price of 17 that expire on February 14th. That's going to capture all of your earnings season, majority of your earnings season. That is going to capture the next CPI report on February 13th and the next Fed meeting on January 31st. So we have a lot of upcoming potentially negative catalysts that is unfortunate because, again, Tesla stock has gotten beaten down recently. Now, if we take a look at Tesla option activity on Friday, you did have 944 orders totaling $2.19 billion, a little bit on the elevated side as far as option activity from hedge funds and institutions on Friday, with a positive order value of 65%. That is a very high ratio, especially considering Tesla stock's been falling basically like a rock over the past couple of weeks. Now, the strike with the most amount of open interest is unfortunately the $200 put, and you do have volume on Friday of about 58,000 and open interest of 67,000. The $300 call also has a lot of open interest with a lot less volume, open interest at 74,000. So technically the $300 call has more open interest, but that's so far away as of right now. I highly doubt that that is even remotely possible for this week. You would have to see something crazy happening. Now, the 230 call definitely has a lot of activity as well. 64,000 for volume on Friday, 35,000 for open interest. The 220 put had volume of 66,000 on Friday and open interest of about 40,000. The 240 call also has open interest of about 44,000, volume of 32,000. So those are your major strikes. The 210 put has open interest of 31,000, volume of 51,000. 220 call has open interest of about 29,000 and volume on Friday of about 50,000. So there's definitely a lot of activity betting on Tesla stock in a very tight range for this upcoming week. Just based on the option activity alone, it would suggest Tesla could rally as high as 230 and potentially as low as 200, maybe even breaking under 200. Although that's not my expectation, that's what the markets seem to be positioned for. Now, personally, I don't think this week's going to be a super bullish week for the broader markets, but Tesla specifically has an RSI of 31.95, so it would not surprise me if Tesla could actually bounce into the mid 220s again before coming right back down to roughly where we are by the end of the week. So overall, I'm not expecting Tesla stock is going to go up huge this week or fall big this week, but I do expect a beginning of the week bounce before we get into some of your retail sales data, some of your larger earnings potentially, and then falling again to about under 220, maybe 215 by the end of this week. So I'm not expecting a big drop this week, not expecting a huge rally. If Tesla could make its way back to about 225, that would be a gain of about 3% this week. And then it's possible you give some of that up, if not all of it up, and you could end right back in the same place by the end of the week. I think there's a couple things the markets want clarity on right now. Number one, first and foremost, is earnings. Are earnings going to come in with 11% S&P EPS growth? If that does not happen, stocks are overpriced right now, and we could be paying a lot more for the S&P than we think. That's potentially a big problem. And on Q1 earnings calls, Q4 earnings calls technically, you tend to get a lot of forward guidance for the new year. So we're expecting a lot of forward guidance, and that forward guidance is going to bake into expectations. They could either get lowered. I doubt they get raised. So I think that's a little bit of a risk. I doubt the markets are going to go from pricing at 11% growth to 15% growth. It's more likely the markets go from 11% growth priced in, maybe to 6 or 7% growth priced in. That's a risk as well. The second thing is, how is the economy doing? Are we entering into a recession? That is a big question that we don't have clarity on right now. Good news is for the bulls out there, as you can see from this post, when you realize they're going to cut rates and the government is going to keep spending because there's no way they let the economy crumble during an election year, yeah, that's pretty much accurate. But take a look at this chart shared by Peru Saxena. He has 350,000 followers on X. He's a retired money manager and founder of money management firms in Hong Kong. I don't know, take it for what you will. I've seen a lot of other people post this exact same chart as well. This is a scary one if it is true though. So, you can always forge a chart and make something blow up on the internet, right? If this is true, this is potentially terrifying, okay? This is the insider transactions ratio. Basically, the higher this ratio, the more selling, the less buying that is actually taking place. As you can see here, it says readings under 12 to 1 are bullish. Readings over 20 to 1 are bearish. You can hardly see it in the scope of this chart, but it would be these lines right here where my cursor is, these dark black lines. You are so far higher than that, it's ridiculous. You're literally almost off the chart here. It says the total top 20 sales and buys are 406 million for the sales and less than 3 million for the buys. So starting off in January, it's not on a good note for insider transactions. Typically, insiders selling a lot of stock, well, it tends to happen in January anyways. That's when you tend to get the biggest spike of the year because you're normally going to sell to pay taxes or sell to do whatever you want for the full year. It's not uncommon. This is very uncommon though. This was actually shared to me by Adam over here on X. So if you guys would like to share with me some cool things, maybe get seen in one of these videos with something you shared to me, go ahead and follow the account right here, Michael Tyler. Pretty easy to find. Just do Michael Tyler Tesla and it'll definitely come up. I like to share a lot of Tesla news, but also like charts and what money managers are saying. Tom Lee, Dan Ive, some of your bears, some of your bulls. It's very unbiased over here on X, believe that or not. I give you the good, the bad, and everything between, and some funny things from every now and again. So there is that. That's basically it for this video. Again, I want to reiterate, I'm not expecting a huge rally this week. I'm not expecting a huge crash this week. If we do get a huge crash over the next couple of weeks, it's going to be the week of January 31st. That is when the Fed has their meeting. That's on a Wednesday. And then the next day you have Apple earnings. And, you know, January 30th, January 29th, January 28th, you're going to be getting a lot of your big tech earnings. A vast majority of the S&P reporting their numbers. That's when you could see a larger pullback, in my personal opinion. Mix that with the Fed. If we're still pricing in 7-8 rate cuts for 2024 and the first rate cut in March, Fed Jerome Powell on January 31st is going to hawk down on the markets. Unless the economy is hawking down on him. Maybe the government, maybe young Biden. Who knows? Let me know what you think down below in the comment section. But by the end of this week, I'm expecting Tesla stock could be slightly higher, maybe slightly lower. This could honestly be a pretty good week to sell some premium as well. So if you guys want to join the trading community, check out the link down below in the description of this video. If you are diligent, if you hold a high degree of risk management, if you want to learn about how to trade options, hedge your portfolio, go long, make some big risk reward kind of returns or trades, more or less. Check out that link down below in the description of this video. It's never financial advice. Disclaimer, you could lose all of your money if you do not have risk management. It's very vital. And that you come to your own conclusions as well, because I might stick out a trade I shouldn't, or I might ride a good trade for longer than I should. Sometimes it works, sometimes it doesn't. So you have to ultimately have your risk management strategy. But if you are someone that wants to come learn these things, check out that link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.